Good morning, folks. Welcome to another chip break. Let's talk about budgets. Now, I know this isn't the sexiest topic, but please, especially if you are a budding entrepreneur or a younger person, I cannot emphasize how helpful basic accounting and basic budgeting is going to be to letting you do things that you want to do, make parts, be happy, enjoy, and have a prosperous and successful endeavor, whatever that is. So let's talk about budgets when you're a micro company, kind of a solopreneur, a one-man shop, less overhead, what the role of a budget is. Then let's talk about a budget when you get to say 100, 200 grand a year in revenue, and it starts to get to the point where your bank account balance isn't a metric of where you stand right now. But please, I can't emphasize this enough. We get so many emails from younger folks, high school, college, that are getting started. This is, I think, one of the most important chip breaks, because as not fun as some of this stuff is, having a basic understanding will put you so far ahead of so many folks out there. Let's dig in. I'm going to start off by saying something somewhat ironic or hypocritical, which is that budgets are complete BS. And I say that, again, half joking. And I say don't budget. Pay yourself first. Come back to that. Why are budgets BS? Well, first of all, they're sort of a corporate construct of, if you guys have ever worked in a company or a large organization, budgets are a total rigged game. You can't predict the future to that level of degree. And if you, from an expense and capital budget standpoint, there's things like use it or lose it, where if you don't spend the money, you don't get allocated next year. So people go make stupid decisions to buy equipment or buy things just to protect their budget, or they try to rig the numbers high or low to make their own performance review look favorable, blah, blah, blah. Well, here's what I will say about budgets. Even if you're doing your own budget, is the one thing that's true about your budget is it's going to be wrong. Why? As much as you may do a good job creating the future, because that's kind of what an entrepreneur does. I love the saying, the future will be kind to me, for I intend to invent it. You just don't know. You just can't predict. So always remember, why are you budgeting? What is the end goal? Is the goal to figure out if you're going to be successful? Is it to save up enough money at the business level to make a purchase? Is it enough? Is it to make sure you can pay yourself enough, or to hire a new person on? Don't just budget for the sake of saying I have a budget, period. Also, again, as a solopreneur, when you're just getting started, you don't need to do all this. This is really the budget that this actually is my budget, took some of the numbers out, but you don't need something. And here's why, and this may be controversial, which is everybody talks about paying, pay your bills and pay, whatever, other people, which yes, you have to pay your bills. But I say pay yourself first. If you are dedicating time to something, make sure you get paid first on a hobby or something like that, because that's going to be a quicker way for you to realize if it's not a successful endeavor. And too many people will go down the path of doing something and then realizing, well, I'm actually not making any money after I pay all my expenses and pay all my utilities or material costs. So say, hey, for every hour I put in, I want to pay myself $20 or whatever the number is, or every product I sell, or every month I want to cut myself a $2,000 check. Because then if you run out of money, you'll either fail fast and fail cheap, which is a big thing of mine as well. It's okay to fail, but fail quickly and fail as little as money as you can. Or you'll figure out how to hustle, make it better, change your pricing, or just, again, do a better job at it in the long run. That's doing yourself a big favor. But keep it high level, pay yourself first. When you start to move on to, where I would say, we are, or somebody like John Grimsmo, if I can include him, would be, you're in that sort of six-figure-ish range, and you basically cannot look at your bank account and see how much money's in there and say that has any bearing on how you're doing at the present moment, because there's times where we have well over 5 figures in just outstanding receivables, which means people owe us money, or 5 figures in outstanding balance dues. This, I don't know if I took this out or not, but right now, CapEx. So we're buying a new plasma machine. I actually did place the order for it, more to come. We bought a deburring machine. We owe for our shop sign. It was more than that. I just took some numbers out. So I actually do have probably a little over 5 figures that I'll write checks for in the next 10 or 20 days. So whatever's in my bank account has no bearing on what I owe. But likewise, we have some job shop money coming in. That's why a monthly budget like this is important. So let's walk through it real quick, and we will share this for the folks that appreciate this. Support NYC CNC on Patreon. As little as $1 a month really helps us justify the time, and we love doing these videos and these chip breaks. So I break it into three sections. I've got recurring revenue. This is kind of like set it and forget it. This is stuff that we have where it pretty much comes in every month, whether it's job shop work or some of the Google stuff that we do, YouTube stuff, this training classes, etc. Put it in there. Don't focus on it because it shouldn't change. Great. Variable revenue. We've got one contract that does fluctuate a lot. I put it's dormant right now. It'll pick back up. It's a higher number than that. Again, just fudge numbers. And then I kind of have a swag factor in there for the miscellaneous job shop stuff. This doesn't really dip below 1,000. Sometimes it's a lot higher than that. And then I've got the products that we make. Our DeWalt chop saw fixture plates. We've got Tormach fixture plates that are actually coming back from anodized today. I'm really excited. So that's a new product for us. So there wouldn't be anything in here, but we'll start. Actually, we did pre-sell a bunch. So, we sell. Oops, that wasn't supposed to be in there. That's coming out soon. Bridgeport power drawbar kits. I have a decent idea of how these sell, and then we tend to ramp sales up as we approach the holiday season. So that's the revenue budget. Expenses. A lot of these sound pretty normal. Most people underestimate their expenses. They're either not honest with themselves or they don't realize it. And that's one of the other things I want to say. If you're looking at this and saying, oh man, this is easy, well, good, go do it. But what I will tell you is most accountants, most attorneys, a lot of business people, a lot of advisors, a lot of financial advisors are terrible at this. They don't have a basic, good, solid grasp of this stuff. And I'm not picking on them. What I'm telling you is here's your opportunity. Get good at this. You don't need to be an accounting wizard or any sort of a financial wizard or master. Know your numbers. Be able to look someone in the eye and say, I know we're going to pull in this much money next month, and I know this is what we're going to have to spend. So for us, that's rent, payroll, utilities, and insurance. I don't want to see all that detail here. I try to keep this whole sheet as clean as I can. So that $760 number is a link down to here, so equals C76. That is an Excel, means I scroll down to here, and that's just a sum of heat, electric, water. Buying stuff, that's my swag. If I look back at my 2016 QuickBooks numbers, I buy stuff like, just stuff that I don't cost out to jobs, and that's kind of my cushion, if you will. But whether it's buying, this morning I saw a deal on 123 blocks and I bought them. Just stuff like that I probably do every 3 or 4 days. Be honest with yourself. I travel for work, so that's in here. Small tools is kind of related to buying stuff, but it's just stuff we buy for the shop. That's not capital items. Capital is something we define as usually more than $1,000. But from an accountant standpoint, when you have something that's capitalized, like a machine, you cannot expense it all in 1 year. Don't let these words intimidate you. What that means is you've got to expense it over a few years. So if I buy a $20,000 Tormach or plasma, I'm not able to deduct that full amount against revenue in 1 year. The IRS says you've got to deem some useful life of that tool. This is where you would talk to your accountant. There happens to have been for a number of years in the United States and to this day something called Section 179 that lets you do accelerated depreciation, which is a very tax favorable thing. Basically, again, talk to your accountant, but if you buy a machine, you can write off the whole amount in 1 year. So if we earn $100,000 in a year, and we bought $100,000 in equipment, normally you would have to depreciate that equipment over a number of years, which means you don't get the tax shield effect from it. This lets you do that quicker. Just so you know, though, if you ever sell that equipment, there is what's called recapture. So it's not as though you don't eventually owe the tax if you were to, say, sell the machine. Office supplies, and then property taxes. So property tax is a great example of what this budget is. There's what's called accrual accounting and cash accounting. And again, don't be intimidated by this. What does this mean? Well, if John buys something from Fred, Fred would book that revenue the day John sends in the order. But Fred doesn't get paid until John writes the check. That's the difference between cash and accrual accounting. Accrual accounting, you book everything when it happens. Cash accounting, you book it when you actually get the money. Some of our vendors don't pay us for 90 days. We know that. That really, really matters when it comes to a budget. I'm sure a lot of you have heard the saying that some high percentage of small businesses fail because of cash flow. And that's important. It's important to note is that doesn't mean they fail because of income or even revenue. It's because revenue doesn't mean jack squat, excuse my language there, if someone doesn't pay you for it. I can have $100,000 receivable from a credit, from General Electric, but if they're not paying it for 90 days and I need money today, then that needs to be factored in my budget. So property taxes are something that we pay. They're due usually in March, so that's why they go there versus dividing that amount equally over this whole period. Non-cash expenses, I put that in here because it's something I want you guys to think about. The fact is, stuff depreciates. Depreciation is both an accounting metric, what we just talked about with the IRS. There's actual guidelines. You can literally find IRS booklets this will put you to sleep quickly, but that talk about how you depreciate stuff. But I mean real world depreciation. I mean the fact that we just bought that brand new Haas. It will not last 50 years. Will it last 20 years? It probably should, but they may need some maintenance along the time with that. Or you need to think about the fact that, well, I know I need to replace it in 10 years. So if I need to replace a $100,000 machine in 10 years, guess what? I need to be saving $10,000 a year for that machine, which means this number needs to be $800 a month. That's how you budget, period. And that may sound scary, but just start thinking about that stuff. Likewise, when we're the building that we're in, hey, I may need a $50,000 roof in 3 years. The time to start thinking about that is not in 3 years. It's today, to be realistic about it. So what this gives you, by the way, the non-cash expenses right now are not factored into this cash flow. That's really important. I put them there more for you guys to think about how you want to handle that. But basically, this gives you cash flow. What's my revenue? What's my expenses? Then you have this section here. It should be called cash balance. So what's the amount in my bank account today? How much money am I making this month? Distributions, that's pay yourself. Funding the equipment reserve, we'll come back to that. CapEx, so that's my little chart down here. I know over the next few months, this is kind of what I've got of both money going out and I've got some stuff we're going to sell, so some money coming in. But the net sum of those three numbers is still negative $6,000. So that comes down right here. And here's my ending balance. So if these numbers were all right, this would mean I've got a big problem because my bank account's going to go negative. What it's also going to show me is, generally speaking, that's what I'm trying to get to at the end of the year. This is showing here, $41,000. So again, why are you budgeting? I try to budget because I try to think big picture to make sure what I'm doing is in some respects a good use of my time. Is it worth it if I sell X number of these products or do this much job shop work, looking forward, is that a good investment of my time and my life and what I'm able to do, and do I enjoy it? Money is not everything, but let me tell you, when you run out of it, it's not very much fun. And then also, people just don't think about, some people I think are not good enough at doing a long-term job of forecasting what they need to do and buy. So I think getting on a basic budget early on, and again, I cannot emphasize this enough, just understand this. If you're a 16-year-old or an 18-year-old and you ever want to start your own shop or start your own business, walk through this Excel file. You will be putting yourself so far ahead. And ultimately, I think that's why we've been successful, is that I'm not a great machinist. I enjoy machining stuff and I enjoy making good parts, but I'm not a great machinist. But I've got that understanding of the business side of being able to sell a little bit, being able to budget a little bit. Really important to being well-rounded. The last thing down here was a similar thing with an equipment reserve. So starts with zero. I've got no money in right now, but each month I put in $1,250. So that's the negative right here. So that money comes out of my bank account and kind of goes into a separate account. Whether you actually move it out of your bank account or not is up to you. It could be a little bit of a pain to do that. But this builds up, so at the end of the year, I've got $15,000 that's still mine that I could use to buy a machine. So I hope you guys learned something. Again, link in the video description to download this Excel file. Please do play with it. Let me know in the comments below if you have questions. Otherwise, take care, folks. See you soon.